Hey there, it's Mark Yegge. Welcome back to the channel. And part of what we do here at the Cash Flow Machine is we talk about the four cornerstones of of our investing system, right? We're trying to get income out of it, but you need to have a lot of things aligned in order to do it the right way. You got to have the right stock in the right market. We're going to talk about that today. At the right spot on the chart, and then what we do is we squeeze the juice. That's collecting the income for what we do. Well, today is a really crappy day in the market. It's down about 400 points on the Dow. Everybody's skittish on the interest rate rise. We have the highest rates on 10 years and 30-year treasuries since 2007. So in about 15, 16 years. So that's freaking the markets out, right? And when the markets are freaked out, when the bond markets are freaked out, then the stock market starts to get freaked out. They're supposed to go the opposite way, but it's not happening and hasn't been happening for a long time. And that means there's trouble in our marketplace. And that's the problem, right? So while I love creating income from covered calls, and you do it over time, if you don't just do it based on daily fluctuations in the market is red. If you look at the screen right in front of you, you see we have a big downtrend in place. See that big red arrow on the right? It's a very red light situation. When you get to a red light in the traffic situation, you don't go, right? You stop. Now, that doesn't mean if you're already in something and you're collecting income that you just stop, although it can. Basically, it just means exercise a lot of caution. And when the market's moving down, the studies that I've seen show that 70% of a stock's direction comes from the direction of the stock market. And so when the market's moving down, your stock is probably moving down too. And so you don't want to be buying, trying to pick the bottom. I mean, you could have tried to pick the bottom any one of these days where you thought it was bottoming out. You can see a little channel that I drew there, and it's broken down through the channel. So you're not going to be smart enough to pick the bottom. Don't believe that you can. Even the computers can't do that on Wall Street. And if you're trying to do that, you're trying to be Nostradamus, and nobody is Nostradamus. Now, over time, you're going to collect the income, and the fluctuations don't matter as much if that's what you can focus on. But if you're going to enter into a position today, wait until the market bottoms out. To me, it looks like there's a little bit of downside left in this before it gets down to a swing point. What is it? 14,800 level. And so if it gets to that point, then maybe that's a bottom. But I wouldn't be buying then until we get a bounce off that bottom with some good volume. Anyway, just trying to protect you a little bit by using the cornerstones of the cash flow machine. And market timing is a critical component. You're like a salmon swimming upstream when you buy when the market is going down. And it's tough to swim upstream. You might as well wait until the wind is behind your sails, to use another analogy. And hopefully that will help. But be careful. The market's right out there, and I don't want you to get caught in it. Take care.